Welcome to the Maximize Business Value podcast. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition their business on their terms. Our mission was born from the lessons we've learned from over 100 business transactions, which fuels our desire to share our experiences and wisdom so you can succeed. Now here's your host, CEO, Mastery Partners, Tom Bronson.
Hi, it's Tom Bronson again, and welcome to Maximize Business Value, a podcast for business owners who are passionate about building long-term sustainable value in your business. We've said it 1,000 times. Well, maybe not 1,000, but a lot of times. Every business on the planet will eventually transition, and that describes your business. So if you want to transition your business on your terms, rather than terms that might be dictated to you if something happens in your life or to your family or to yourself, then you found the right place, because this is where we teach business owners how to maximize the value and transition their business on your terms. This episode is part of our series from the latest book, Maximize Business Value Playbook, 65 Specific Actions to Dramatically Improve the Value of Your Business. Today, we're on Chapter 22, Re-Examine Your Tax Status. Now, most business owners can tell you the type of corporate structure that they have, whether that's a C Corp or an S Corp or an LLC or a limited liability company or a partnership or any number of other type of structures. Yet these owners can't tell you why they're structured that way. Many business owners seek advice from an attorney or a CPA when setting up their corporate structure. And that's the last time they think about it. But things change over time in a business. That's a great practice for business owners to examine their corporate structure and tax filing status annually, especially if there's a change in ownership or tax laws. Now, what may have been the best structure 5, 10, or 20 years ago may not be the best option for the business today. The corporate structure should be a balance between legal protection and tax efficiency. Now, C Corp may provide the best legal protection in a particular business, but it may be way less efficient from a tax perspective. A partnership may give the best tax efficiency, but may not provide enough legal protection. That's why it's imperative to have a conversation with a tax professional and a business attorney, and a three-way conversation is best to select the right balance for your business situation. It's especially important to get that advice, hear me now, at least 5 years. That's 5 years before a business transition or an exit event. Because if a transaction is imminent and a change is made in the corporate structure, the IRS can go back as far as 5 years, and that's called a look-back period, and reverse any change that was made simply to reduce the tax consequences of the transaction. Now, when this happens, it can be very unpleasant, a very unpleasant surprise, because the tax burden may significantly reduce the net of the proceeds of that transaction. Don't let that happen to you. If you ever plan to sell your business and you have a C Corp, please get some advice right now and think about making a change there. So the three Maximize Business Value recommended actions this week are: number one, review your tax filing status with your CPA and attorney to ensure that you have the most efficient tax structure. Number two, remember to make any changes at least 5 years before an exit event. And number three, search the internet for articles on the difference between C Corps and S Corps and LLCs and partnerships. It might be some fascinating reading, or it might put you to sleep, solve insomnia. So next week, we're going to cover the need to have a general counsel in your corner. This is the Maximize Business Value podcast, where we give practical advice to business owners on how to build long-term sustainable value in your business. You found the right place. This is episode number 182. That means there's another 181 episodes just waiting to be downloaded and listened to wherever you found this podcast. So until next time, I'm Tom Bronson, reminding you to pick one thing, just one thing, to dramatically improve the value of your business, and do it today while you maximize business value.
Thank you for tuning into the Maximize Business Value podcast with Tom Bronson. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition on their terms. Learn more on how to build long-term sustainable business value and get free value-building tools by visiting our website, www.masterypartners.com. That's master with a Y, masterypartners.com. Check it out.
That was perfect. I wouldn't make any changes on that.